Hey guys, back for another video. What happened to Bed Bath & Beyond? How does this store that seemed to be completely ubiquitous in the United States, how are they found bankruptcy? What the heck happened? So I'm going to tell you what happened, how it happened, why it happened, and what we can do in the future. Now I'm going to tell you the details of this up front, so stick with me, and I'm going to break all those details down, what exactly they all mean. So what Bed Bath & Beyond, one of the primary reasons they ended up in the situation they were, is they started to do something called stock buybacks or stock repurchases. So since 2004, they bought back $11.8 billion of their own stock. Now, it's a lot of money, right? Usually companies will use cash, excess cash, to do that. However, in 2014, they were getting increasing pressure to drive up their stock price, which is one of the things that when you do stock buybacks, what happens? They started to use debt. Debt was cheap. Interest rates were super low. Again, 2014, this was 9 years ago. So debt, the cost of debt was low. So company management thought, hey, we can borrow at this rate, and we're going to get a return at this rate. This is a really good idea. And they figured, it's going to drive the stock price, et cetera. They were doing these stock buybacks up until about a year ago, up until February of 2022. Just to put this into context for you, I like to always give you some context to tell you how bad this is and how bad the bottom fell out on this crap. So the last 3 months that they did these stock repurchases or stock buybacks, the average price they paid for their shares were $16.04. $16.04. Again, they stopped it in February 2022. They said, "Oh my gosh, bottom's falling out. We gotta hit the panic button here. We got to stop doing this." Problem is, they were a little too late. In 2022, their stock price dropped by 83%. But wait, it gets worse. In 2023, it dropped by another 88%, so much so that on the day that they filed bankruptcy and made it public, their shares were trading at 29 cents per share. Now, you don't have to be a math whiz to figure out if you buy it $16.04 and now it's worth 29 cents, not good, okay? Not good. I should mention, by the way, I said 11.8 billion in stock buybacks they had done. When they filed bankruptcy, they had $5.2 billion in debt, almost or over double what they'd. I'm not less than half, I guess. Thinking on the way you think about it, of what they paid in stock buybacks over the years. So you think they would have that back, right? All right. So what is this? A stock buyback, as you might guess by the nomenclature, is when a company buys its own shares. Now, that's typically when they have excess cash, as I mentioned, and they think that the stock is undervalued, i.e. it's going to continue to go up. Now, why do companies do this? One of the primary reasons they do it is to drive the stock price up. So you're going to have less shares outstanding. Typically, that drives the stock price up. Another thing it does when you buy back shares is it improves a lot of your financial ratios, kind of artificially. It's going to drive up your earnings per share. Because you have less shares out, all other things being equal, this is what happens. It drives up your earnings per share because you have less shares, right? If earnings are the same and you're dividing by this number of shares and I'm dividing by this, it's going to go up. That's a good thing for an investor. They see earnings per share going up. That looks great. Your return on equity, right? Sounds great. Your equity is going to be less. So again, your return, even if it stays the same, it stays flat, you got less equity. So the denominator is lower. It's going to go up. Typically, if you have the same amount of money you're paying out in dividends, it's going to increase the dividends per share that your shareholders get. Everyone loves that. Investors love that. So that makes it seem like a great value, which again, typically drives up the stock price. As I mentioned, companies usually do this when they have excess cash. However, interest rates were so low that a lot of companies started to use debt. Because again, as I mentioned before, they can borrow at this rate and get a return of this rate. Hey, that sounds like a great idea. The problem is not only that with Bed Bath & Beyond, with their stock price plummeting, but as everyone has experienced that has any form of variable debt, interest rates have increased significantly over the last 12 to 18 months. And a lot of times that debt that they use to borrow to buy back shares is variable debt, which means the rates have gone up significantly, which means the cost of that debt has gone up a lot. And that's exactly what happened with Bed Bath & Beyond. They use variable debt. The cost of that went way up and their stock price absolutely plummeted. All right, so what do we do about this? How do we fix this? There's really no way to fix it. Frankly, I am a big fan of free market. What I would tell you as an individual, as you're investing in individual stocks, especially, to use a lot of caution, unless you really know what the heck you're talking about. I mean, all this information is available in a public company's quarterly earnings report. You can see how much they did in buybacks. You can see their cash. You can see their debt. Did it go up? Did it go down? If you don't know how to interpret any of that stuff, that's going to be all like Greek to you. You're not going to understand it. So you get professional help for that, especially with individual stocks. And that way you won't end up in a situation where you end up investing in a stock that looks good because all these financial ratios are getting better, and all of a sudden the bottom falls out like it did with Bed Bath & Beyond. So that's what happened. That's what stock buybacks are, and that's what I think we should do. So stay tuned. If you love these videos, make sure you subscribe, continue to watch, like the videos. We've got a couple more coming out here soon about some things a little more controversial.